This is the Financially Simple Podcast, a show dedicated to destroying the complexities of money for today's small business owner. And now, here's your host, pizza-loving, certified financial planner, Justin Goodbread.
Welcome to Financially Simple. I'm your host, Justin Goodbread, and today we have come to the very last episode in our series on maximizing or growing the value of your company. Today, we're going to conclude the deep dive into building a best-in-class risk management department. For those of you who followed this through some now almost 100 episodes, we have dissected a business and we've dissected methods and ideas and areas that we can pay attention to drive the value of our company. What we're dealing with today is additional insurances that you may need. Now, in the last few episodes, we've dealt with what is a lawsuit, some insurances that you can use to help offset a lawsuit. Today's just some clean up the little pieces here, some insurances that many businesses will have. Many businesses will have these. Now, they may be add-on riders. They may be a standalone policy, but nonetheless, they're just some insurances that you may consider. I realize that we are insurance poor, and I realize that often insurance is sold, and that should not be the case. With our clients, what we try to do is educate. Here's the risk that you're trying to mitigate, and do you want to self-insure, which is not a problem if you can do it, or do you want to mitigate the risk? So here's a few extra insurances that we didn't cover in last episode that you may want to consider. So the first one is what's called professional liability. And typically those like myself will have E&O insurance. Attorneys and CPAs and engineers and financial planners and et cetera will have errors and omissions insurance. And that's when we make a mistake or we forget something. Let's say that somebody called me and said, "Hey, Justin, I want you to sell this particular position in my portfolio and do it before 3:00. And then something else happened and I missed it. Because I missed that direct instruction, then I could be liable for a loss. So let's say that position fell 10% from the time that they had told me to sell the position to the time I actually sold the position. My E&O insurance, that'd be an error. I would have messed up. So my E&O insurance should cover that. Now, doctors or dentists or veterinarians or chiropractors, most of your medical world will have malpractice insurance. And that's the same concept. It's something that they potentially missed. Now, I'm going to go on a sidebar soapbox for me here. And I think every professional that would listen to this show would say the same thing. Just because a claim is paid doesn't mean there was an error. Doesn't mean there was something bad. Sometimes insurance companies will choose to settle something because it is easier to settle than it is to fight. And so just because a claim is made on behalf of somebody doesn't mean there was an error. So I heard somebody the other day, they said, "Justin, I've reviewed this particular professional as a doctor of some sort." And they said, "But man, they've had lots of claims. And in this particular jurisdiction, you can actually read the amount of claims." And I said, they're in a high risk business, but just because there's lots of claims doesn't mean there's anything wrong. Now, it may not mean there's anything right, but it doesn't mean there's anything wrong. So professional liability for you is a coverage that can help offset or reduce your risk in the event that you actually did make a mistake, a major mistake. And so that's where errors and omissions or malpractice insurance comes into play. Now, another insurance which is real popular right now that we're talking a lot with is cybersecurity or data breach. Sometimes they're lumped into two separate riders. Sometimes they're on one rider. Sometimes they're on a standalone policy. Sometimes they're on a BOP policy like we talked about last time. The simple definition for cybersecurity data breach is if you're in the business that stores sensitive or non-public information about people, whether it be employees or clients, in your computer, on the servers and paper, et cetera, then what happens if somebody was able to breach your electronic system and get that information and then turn around and cause damage to those individuals? So that's where cybersecurity or data breach goes into play. In the financial world, we have it. We have that coverage. Most planners do. In the accounting world, the legal world, many medical offices will have that. There'll be a lot of people that have that type of coverage. And so that's just a coverage you may want to look at. So the way I describe it is if you have any information that's non-public or that's sensitive in nature that you store about employees or clients, then this coverage could help protect you or help mitigate against loss. Another insurance that you may consider, again, this could be a standalone coverage or it could be an add-on for many types of policies depending on the carrier, is what's called business interruption insurance. This past week in Tennessee, in our region, we had a lot of rain. And some of our local townspeople, our community, had to shut their offices down because of flooding. Now, flood insurance is a whole different animal that you may have to have. We're going to talk about in a second. But business interruption insurance comes in and helps to pay or help carry the expenses of the business whenever there's a interruption of some sort. Most of the time it's natural disasters like a hurricane, tornado, flood, things of that nature. Again, you'd have to read the fine print of your policy and talk to your agent. But the concept is something happens that's outside of your purview, that's of a loss position. Business interruption insurance provides income to help keep the company going, the employees paid, et cetera, et cetera, et cetera. The next type of insurance is called renter's insurance. And you say, well, Justin, I thought that was just for people who rent houses and apartments. No, if you're a business owner and you're renting space from somebody, you may need renter's insurance. You may need to have that as a rider, as a standalone policy. Again, depending on your agent, your district, or your policy provider. Let's say that my office, I don't own the building we're in. We rent it or we lease it. Let's say it burns down. I lose all my computers. I mean, we've got tens of thousands of dollars worth of equipment here in this office. That would be bad. So we have an insurance where if that did happen, that we could replace our data points, all of our computers, all of our desks, all of our things of that nature. So that's renter's insurance. Like I was mentioning earlier, flood insurance. It's one of those things that people don't think they need it until they need it. But by the time you realize you need it, it's a little too late. So the way I talk about flood insurance is flood insurance covers from water rising up. That's the simplest way I can describe it. Water rising up out of the ground or up, not coming down. So let's say the roof got blown out in a tornado and the rain went into the house. Homeowners insurance would cover that, or business insurance would cover the rain going in. But if the sewage backed up and water flooded up and flooded from the street into your building, typically business insurance is not going to cover that. It's going to be a flood insurance. If, like the rain we had the other day, the rain caused the rivers to swell and rivers overswelled their boundaries and went into businesses, that's a flood insurance issue, not a business owner's insurance or a BOP policy or a homeowner's policy. So you may consider flood insurance. May consider it.
You are listening to Financially Simple, destroying the complexities of money for today's small business owner.
Now, once you get out of what's called the property and casualty business, that's the ones I've just talked about, you get down into the personal lines. Every business owner, in my opinion, should have life insurance. In fact, in our next series, we're going to start dealing with those individual things that business owner can do from a personal level, from personal planning standpoint. We talked a lot about growing businesses and growing values and starting businesses. Now we're going to deal with the person of the business owner. So life insurance is one of those things that the business may buy. It may buy on you, the owner, or you may buy it on a key employee. You may need a life insurance on a group of employees. You may offer life insurance to all of your employees on a group coverage. So it's an insurance that you may consider. Another one is that I think is mandatory, at least for me, is disability insurance on the business owners, and they're what's called business overhead disability. And that's where if the main provider, let's say that myself, if I could not work, there's some coverage there that would pay for me to bring somebody else in to take care of the clients whom we serve. Oftentimes you see business overhead insurance or business overhead disability or overhead disability, depending on the term you use. We often see that with doctors, lawyers, CPAs, professionals who typically their work employs multiple people. And so in the event the dentist smashes his finger in the door and he can't go to work like someone I knew did one time, then that insurance will help provide income to keep the employees paid or to bring in an associate to help keep the office operating. So that's overhead disability. And probably my least favorite, and the one that everybody loves to hate and everybody loves to complain about, is health insurance. Yes, I believe I just said a profanity. Health insurance. Health insurance is like the vein. It's like the evil empire for business owners. It's just nasty. The reason why I say that is, number one, politics are greatly involved in that. No one knows where health insurance is going to be today, much less tomorrow or 5 years from now. Once you provide health insurance to your employees, you're pretty much stuck with it. And if you decide to cancel it, you're going to tick all your employees off. Then when you actually do provide it to them, the rates are going to go up in a year from now. We almost guarantee that based on this past performance and based on the way insurance works. We pretty much can guarantee the insurance rates are going to go up. You're like, well, Justin, they don't always go up. You're right. They don't, but you can almost count on it. A year from now, everybody's going to be disgruntled that the premium prices went up. So in order to keep the premium prices down, you're going to cut benefits and everybody's ticked. So I'm not a big fan of health insurance. In fact, so much so that if I can have our clients not offer health insurance through their businesses, I would love for that to happen. Well, Justin, do you offer health insurance? No. I'm staying away from it. Instead, what I like to do is I like to pay our team members well enough that they can go and secure their own. Well, Justin, what happens if somebody is not able to afford their own? Again, I'm going to pay them enough. What happens if they have health issues? You know, part of what we do is we don't offer health insurance. So if they have health issues, hopefully they have a significant other or spouse that they can get insurance on, or now, thank goodness, with the exchange, they can go and get a coverage that way. I just am not a big fan of health insurance. And at this point, all the health insurance agents who listen to this are going to send me the nasty grams and say, well, Justin, you're just wrong. Maybe so. So if you think I'm wrong, do me a favor. Send me an email, Justin at Financially Simple, and tell me why I'm wrong. And if you have a good answer on why I'm wrong, I'll tell you what, I'll bring you on the podcast as a guest, and you can tell the entire audience why I am wrong on health insurance. You say, well, Justin, I think you're right on health insurance. Do me a favor. Let's have a tweet session where we tell the whole world that we hate health insurance. I'll join you. I'll get on YouTube and do a video about it. I don't mind. I do not like health insurance. So you say, Justin, I already have it in my business. What can I do? We need to work on it then. Now you need to look at talking about, do you want to keep it? Do you want to get rid of it? If you're going to keep it, how do you reduce expenses, knowing that you know it's going to go up in the future? That's part of those insurances that you may need to offer. I have a client of mine that's up in a rural part of the country that he offers insurance and covers all of the premiums because he's having to compete against various types of unions, various types of organizations who do something very similar. So he has to do that. But nonetheless, I'm going to digress and get off my soapbox of health insurance. You probably didn't know I didn't like health insurance. I don't. I'm not a fan of it. Now, until I need it, of course. I mean, that's the way everybody is with insurance, right? So I'm going to wrap up this episode and give you those couple of insurances there. I've given you 8 different types of insurances that you may consider in your business. Now, this is not an exhaustive list by no means. I'm going to tell you to reach out to your business insurance provider, your agent, and ask them to do an assessment on your business and make sure you have the right coverages in place. I have 2 agents. I have one for my home and one for my business. I do this personally for myself on an annual basis to make sure my coverages are in place. And every year I end up finding we have to tweak something because my life changes, and that's okay. So at this time, guys, I'm going to tell you, it's been fun going through this series. We have some new things coming up. I'm excited about it. We're going to change the format of the show a little bit. I hope it's going to be a little bit more entertaining. I know I'm a boring guy. I get that, but hopefully it's going to be a little bit more entertaining. The team is trying to get me to do some new things. We will see how it goes. But at this point, I'm going to ask you to do something for me. We put out 140 episodes now of up to 20 to 30 minutes. That's a lot of hours of talking. If you like the podcast and you're listening to me now at episode 140, do me a favor. Take this episode, put it on your social media, put it on Facebook, YouTube, LinkedIn, Twitter, and share it out with your friends and say, guys, I've listened to X number of episodes of Justin. He's helping me in my business. And tag me in it. Send me a message saying, Justin, your episodes are helping me. We're getting an unbelievable thousands of downloads, and I'm just amazed at the sheer amount of people who download the episode. Just shoot me a tweet out there. Shoot me a Facebook message, a LinkedIn message. Brother, your episode on so-and-so was good. We're trying to track who exactly is listening. Yeah, we see the analytics, but you can help me make my show better for you guys. I'm trying to give you the information in our head of what we do in our offices day in, day out. So do that for me. If you like the podcast, share it with a friend. And if you don't like the show, share it anyways. As I say every week, life is hard. It is. Life is good and life can be frustrating, but money doesn't have to be. It really doesn't. Money's so simple. Let's continue to make our lives at least financially simple. Y'all go out and make it a great day.
You have been listening to the Financially Simple podcast. The information in this show is for informational purposes only. This show is not investment advice. Instead, seek help from a competent financial advisor. Justin Goodbread, CFP, is an investment advisor representative of Heritage Investors, a registered investment advisor.